Hello, welcome back to another video. I'm sure by the thumbnail you will have known where we are heading to and all that. This is the second part of market structure series. And please, if you've not watched the first part, you might have to go back to the video and probably go through it before coming back to this particular part. All right, because there are some things that will be said here. You might not grab it simply because you've not gone through that the first part of the video. You might know it quite all right, but not in the light of which you understood it right from the onset. So we're going to go a bit deeper. And you remember that I promised you three things, that by the end of this series, your strike rate will be boosted. You will know how to target or have an insane risk to reward. And at the same time, most importantly, you will have clarity and confidence while trading. And if you're getting any value from this content or video, please hit that thumbs button. Kindly hit that thumbs button, then subscribe to the channel, and do me a favor by dropping a comment in the comment section, either a full stop, comma, or whatsoever, just anything, a love emoji, whatsoever, just drop in the comment section. This helps the algorithm to do all the whole YouTube stuff of it, and it helps the video to be pushed to wider audience. So with that being said, let's head up straight to what today's video is all about. All right, from the part one of the video, we've dwelled so much on this particular. If you have watched that one, I'm sure you'll be familiar with this particular price action. You're seeing it right before you. And we know that the market move in this fashion. Let's call it this fashion. This is the order flow in which the market actually move. The price delivers across time frames and all that. If you go to the higher time frame, to the daily time frame, you see this kind of price action, weekly time frame, this kind of price action, monthly, week, daily, down to second. They all move in this kind of what fashion, creating series of what high highs, higher lows, higher highs, higher lows, higher highs, higher lows, and all that. Now, it is this impulsive corrective legs that creates a trend that we have established from the previous video. And if you have not watched, please go through it. And I'm promising you that by the end of this video, you will realize and you get to know the reason why having only 3 trend line on your chart is all what you need to trade profitably. So stick to the end or watch to the end, okay? So this is what we established from the previous part. The market move in this fashion, creating higher highs, higher lows, high highs, higher lows, high highs in an uptrend. While in a downtrend, it will keep creating something like this, but in a reverse version, creating lower lows and lower highs, lower lows and lower highs. All that are just terminologies for sake of convenience. But what the market does is simple, layman language: push, pull back, or impulsive corrective, impulsive corrective, and that creates either an uptrend or a downtrend. Having established this fact from the previous video, now are you guys ready to hear one of the secret sauce to profitable trading? That is both impulsive and corrective leg on the higher time frame is a trend on the lower time frame. Please get that. Both impulsive and corrective leg on the higher time frame is a trend on the lower time frame. All right. Now, right before you is the fractal nature of how price deliver across multiple time frames. That's why I tag it as multi-time frame market structure, right? That's why I tag it as multi-time frame market structure. It is what the fractal nature of how the price deliver or how the orders are being pumped into the market. And this is what you basically see on different time frames. And you know what multi-time frame market structure is. That is different time frame intersecting with each other and how you can actually navigate through them. Trust me, it's not everybody that know how to actually use this simple thing you are seeing right before you now. Now, take this blue line you are seeing here to be the daily time frame, for example, right? The market creates a higher high, create a higher low, create a higher high, create a higher low, create a higher high, create a higher low, create a higher high. At some point, the market change trend and start creating a what? A lower high, lower low, lower high, lower low. This is what you basically see on the daily time frame, right? This is what you basically see on the daily time frame. But right in the midst of this daily leg that you are seeing here, right in the midst of the daily leg is another trend on the lower time frame. You will understand as we progress into this video. This is a daily leg. This is a pullback. This pullback should not be broken. This is a daily leg. This is a pullback. This pullback or correction should not be broken. This level here should not be broken. This level here should not be broken. And the moment we notice that this level here just got violated, we already know that the trend has changed from going up into going down straight. Then we can shift our bias from what? Buying to selling. All right. Now, on this daily leg you are seeing alone, right on the lower time frame, you will see this little trend on it. Both the impulsive and the corrective leg will create this little trend on the lower time frame, right? You can see this red line creating trend on the what? The lower time frame across this single leg movement, upward, downward, and this is how the trend keeps moving forever, and that is how it will be. Nothing will change it. So understanding this multiple market structure will give you an edge even while you are trading. Then, how do we know when this daily pullback is about to start and this daily push or impulsive leg is about to start? That is when we now buy into the mindset of the lower time frame. That gives us or try to tell us that the daily leg is about to kickstart. Please note, before anything will happen on a daily time frame, it would definitely has happened on the 1 minute, the 2 minutes, the 5 minutes, the 10 minutes, the 15 minutes, the 1 hour, the 4 hour, the 8 hour, before it will happen on the what? The daily time frame. Likewise, before anything happened on the 4 hourly time frame, it definitely has happened on the 5 minutes and the 15 minutes, the 1 hour, the 30 minutes, and all that, the lower time frame before the higher time frame. So note that. So for every impulsive leg on the higher time frame, it is a trend on the lower time frame. How then do we know that the higher time frame is about to pull back? That is when we use the concept of what? Change of character. When the daily leg is about to pull back, we will experience change of character on the 4 hourly time frame before the daily leg will start pulling back. When the daily leg, the impulsive leg is about to kickstart, we will experience a change of character on the 4 hourly time frame before the daily leg the daily impulsive leg will kickstart. And that will continue. So before this pullback, there will be a change of character. And before this next impulsive leg, there will be a change of character. Before this pullback, there will be a change of character. Before this next impulsive leg, there will be a change of character. Notice something. When this price gets to this level, is there any change of character? It's strictly a break. No change of character. Before it changed character, the market has actually changed what? Trend. And this becomes a downtrend. Before this downtrend will kickstart, before this impulsive leg will kickstart, there will be a change of character. Before this impulsive leg will kickstart, there will be a change of character. This is how you marinate the higher time frame and the lower time frame all together. So before 4 hourly time frame will begin to have an impulsive leg. What I mean by impulsive leg is this longer leg you're seeing. The 15 minutes might have changed character. The 30 minutes might have changed character. The 5 minutes might have changed character. But we cannot be working with all the time frame. That's why we narrow it down to the time frame whereby I'll be giving you by the end of this particular video here. Know that before daily time frame will begin to pull back, there will be a change of character on the 4 hourly time frame. And before the daily impulsive leg will begin to kickstart, there will be a change of character on the what? The 4 hourly time frame. So it is the lower time frame that it kind of tells us that the daily leg is about to kickstart, or the pullback or the corrective phase is about to kickstart. But either way, as long as you're on the lower time frame, you will have trend both up and down. So note that both impulsive leg and corrective leg create a trend on the lower time frame. If you understand this concept, whichever strategy you are trading and whichever market you are trading in, you will find trading very, very much easy and simple. You can easily pinpoint, all right, the impulsive leg have not kickstart. Why? Because I've not experienced a change of character. You will know that. The corrective phase have not kickstart. Why? Because I've not experienced a change of character. Then you begin to follow it gradually as the market progresses into the future. So simplifying that particular concept to simplifying the previous concept you are seeing is as simple as on the daily time frame, have an impulsive leg, right? Before the impulsive leg kickstarts, you should experience, come on, where's my pen? You should experience a change of character. The moment you have this change of character, you track the market down until it gives you another change of character right from this part. Then that will tell you that what? Another daily impulsive leg is about to what? Kickstart. And we basically trade this particular leg you are seeing here, targeting what? This next impulsive leg up here. And that we will have our trend line, right? That will have our trend line map out in this format, sorry. We'll have our trend line map out in this format. Now, this is where one of the golden nugget is, right? We'll get into that, deeper into that, as we continue. Please bear with me. This video might be a bit long, but it is all what you need to be profitable with any strategy at all you are trading. Now, this is a daily impulsive leg, right? This is a daily impulsive leg, for example, and this is a 4-hourly impulsive leg. This daily impulsive leg will push up, impulsive, right? We'll expect, before the pullback will begin to kickstart, we'll expect a change of character. This change of character, the moment it begins to happen on the 4 or the 8-hourly time frame, we will have another trend line exactly above this particular zone here you are seeing. This is a red sign that I used to tell you that whenever you are trading trend line and your higher time frame is the daily time frame, and when you get down to 8 or the 4-hourly time frame, you are having opposing trend line on the 8 or the 4-hourly time frame, be careful. Do you know why? The reason is simple. Right on this 4-hourly time frame, the 15 minutes is creating what? Lower low, lower high, lower low, lower high, lower low, and creating a trend down within that what? That 4-hourly time frame. So we want to have when the daily time frame, the 4-hourly time frame realign, and that is when we'll have this change of character you are seeing here. This is the whole system in which we trade. We'll throw more light to it, right? So we want to buy here, but when do we buy? We will expect what? A change of character. Very important. How do we have a perfect approach to price action reading or to this market structure reading that will simplify everything to us? Right before you, this particular point you are seeing here is the daily time frame. Sorry. Come on. This particular point you are seeing here is the daily time frame. And this here, you can see the daily time frame. I've annotated that, and this one is a 4-hourly time frame. Then we have the 15-minute time frame. This is the fractal nature of how the price deliver across all time frames. Right? So when we have a daily impulsive leg, before the daily impulsive leg, the daily pullback will begin to kickstart, the 4-hourly time frame will change what? Trend. Then the 4-hourly time frame will begin to pull back, creating lower low, lower high, lower low, lower high, until you get to this particular level you are seeing here. Right? The moment the price get to this particular level you are seeing here, come on. Sorry, let me do it very well for, all right. The moment the daily leg get to this particular level you are seeing here, what we expect, all right, is a change of character on the what? The 4-hourly time frame. The reason why we more often than not I don't like trading this particular leg is simply because I want the market to align with the daily time frame. What it means is, and please note, this helps you to target an insane pips that sometimes let's imagine. If you want to target up to 1,000 to 500 to 1,000 pips or 2,000 pips into the future, take this approach from me today. So that even though you don't catch the whole movement, you catch no minimum 200 pips from the market, and you'll be good to what? Go. Now, this is the approach. Sorry. This is the approach. Let me adjust this drawing properly. This is the approach. The daily leg make an impulsive movement, right? The 4-hourly leg is pulling back. Right on the daily time frame, we will have our trend line map out in this format, right? This will tell us that, okay, the daily time frame is what? Creating high highs and high lows, and what? Creating what? An uptrend. But once we get to 4-hourly time frame, we begin to notice this kind of movement, then we'll have to match break a bit. Why? Because the daily leg is creating, we have an uptrend on the daily leg by our trend line. And coming down to the 4-hourly time frame, we are now seeing an opposing trend line. That is not our system, right? So we want the 4-hourly time frame to realign with the daily time frame by what? Having a change of character and realigning. The moment we have that, then you cannot tell that, okay, the 4-hourly time frame has realigned with the daily time frame and a kind of trying to start what? Moving up. Then you can have your 4-hourly time frame and start trading along. Sorry. The moment we have this, then we wait for 15 minutes to create a minute what? Trend line. That's why I say the moment you have 4-hourly time frame and the daily time frame, 4-hourly time frame aligning together, then you cannot begin to look for just simple opposing trend line on the 15 minute. Then you trade progressively along as the price progress into the future. Okay, this is how the market moves. The daily time frame creates an impulsive leg. 4-hourly time frame, once the daily time frame is making a correction, 4-hourly time frame creates a downtrend. Once the daily time frame is about to create another impulsive leg, 4-hourly time frame will begin to what? Create trend, but this time around to what? To the upside, right? And the moment 4-hourly time frame creating trend to the upside, what do you expect on the 15 minutes? Right? The 15 minutes will be creating series of what? High highs, high low, high highs, high low, change of character, high low, lower low, lower high, lower low, lower high. And this is how the 15 minutes will keep creating until it hits this daily what? Leg. Right? Pardon my drawings and all that. Okay. And I hope you get the point. This is how we simplify the whole thing that we have said from the past. Very, very, very simple. So on the daily time frame, be it this particular point you're seeing here, right? On the daily time frame, be it this particular leg you're seeing here, and this particular point being the 4-hourly time frame, right? This is the 15-minute time frame. How do we combine the whole thing and simplify it to as simple as having 3 trend lines on the chart and we trade it profitably? I'm going to tell you, right? I'm going to tell you. Now on the daily time frame, right from what you are seeing here, we simply want to have what? A trend line, sorry. We simply want to have a trend line to the upside. This is what we want on the daily time frame, right? And how do we confirm that? You should know by now, if you have been here for a while, how to confirm a valid trend line. Let me change this color to what? Blue, right? Oh, shit. Let me change this particular color to blue. Okay. On the daily time frame, we want to have this particular what? Trend line. Then we want to scale down to either the 8-hourly or the 4-hourly time frame and have a kind of same trend line pointing towards the same direction. We don't want to have an opposing trend line on the 8 or the 4-hourly time frame. Take for example, right before here, this is what we don't want. We don't want to see this on the 4-hourly time frame. What this tells us is the market is not ready to move down to what? This particular point yet. You will have to exercise patience. Wait patiently until the market realign and break this particular trend line here. Once the market realign and break this trend line, you will know that this downtrend has actually stopped and the uptrend is about to kickstart, which is in line with the daily time frame. Then you can draw your trend line starting from here to what? This particular point here. The moment you have this done, right? The moment you have this done, that is all what you need. The only thing you want on the 15-minute time frame is an opposite trend line on the 15-minute time frame. Wait for the break of that opposite trend line, then you can trade along with it. Just like what you are seeing here, right? The moment I have the daily time frame telling me this particular direction and the 4-hourly time frame or the 8-hourly time frame pointing towards the same direction, I am okay. Simple. What I want to do is I want to see a corrective movement on the 15-minute time frame. And I always annotate this with what? Red line, which is my action line. The moment I have this corrective pullback on the 15-minute time frame, and because the impulsive leg on the daily time frame has actually kickstarted, which is this particular movement you are seeing here, a push, a pullback, and a push, or an impulsive corrective and impulsive leg. Because this particular movement have actually kickstarted by giving me this signal you are seeing here, I'm already done with the whole analysis on the higher time frame. What I want on the 15-minute time frame is just a simple change of character. Then I look for what? Imbalance down in this lower time frame, and you begin to trade along. We'll get deeper when we get to the chart now, right? Please note, whichever strategy you are trading, be it trend line, SMC, SMT, SMC, supply and demand, ICT concept, whatsoever you are trading, whatsoever strategy you are trading, have a consistent, repeatable action. If you don't, you're not going to make money off of this market. Trust me. The consistency is not only by sitting in front of your chart and be clicking buy or sell. Your consistency is in your system, repeating that system over and over again. And you must have a clear perspective on what you are doing on the chart before you can start repeating it. If not, it will be lost here and there until the account is gone. Personally, this is my top-down process. This is my repeatable approach whenever I am on chart. I get my direction on the daily time frame. I scale down to the 4-hourly time frame to read into the price action detail. What I want to do on the 4 or the 8-hourly time frame is the 4-hourly or the 8-hourly time frame in line with my direction on the daily time frame? If it's not in line, I'll have to pause. Pending when 4-hourly or the 8-hourly time frame realign with the daily time frame, then I trade that overall direction on the daily time frame. Once I have that in line with the daily time frame, then I can now scale down to 15 minutes to find my simple opposing trend line and trade along. If you have been here, you understand what I mean by opposing trend line by now, right? So whether you're a swing trader, a scalper, or a position trader, define your time frame. Define your time frame. Write it somewhere and follow suit. Don't trade daily 4 hourly, 50 minutes today. Tomorrow you start trading 4 hourly, 50 minutes, 1 minute. No. Have a repeatable action while you are on chart. That will guarantee your success along the long run. You will be able to navigate with ease. If I get to my direction and I know that the market is downtrend, get to my 4 hourly or the 8 hourly time frame, and I see an uptrend, I pause. Yes, the price is not ready to move yet. But if I have the same thing, then I have the zeal to move down to the 50 minute to find my entry. All right? So on your notes, drop down your time frame that you want to be following. Right now, pick somewhere, take a note, drop it down. Either you copy my own or define your time frame that you want to be following. Before we get into the chart, how do we frame our buyers from while we are trading? How do we frame our buyers? How do we trade this system profitably? How do we trade it? This is the golden nugget here. On the daily time frame, I want to see this price action. What do I want to see? Simple. Either an uptrend or a downtrend on the daily time frame. This is what I want to see. Then I want to identify my highs, right? And my lows on the what? The daily time frame. The reason for this is this particular point here should not be broken. So whether the market pull back to this particular point and drop, or it pull back to this point, sorry, or the market pull back all the way to this point before dropping, I am okay with it. Right? I've told you times that number, trend line is an area and not a spot. So a break of a trend line is not equal change of trend. Before the change of trend will happen, then this up here has to what? The market has to move from here and break above this. Then we call this a church or change of trend. Then we can expect something like this, right? So as long as the market is below this particular price on you're seeing here, excuse me, too much line on the chart. As long as the market is up below this particular line here you're seeing here, I'm all out ready to take up a sell setup from this particular zone here. All I want is for 4 hourly time frame to realign, right? So if I get to 4 hourly time frame, the market might have created a high, 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 low, high, 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 low, high, high, pull back to this particular trend line, then give me a shift, then start creating a lower low. What it means is the daily time frame is bearish, right? And the 4 hourly time frame has what? Switched from what? Bullish to what? Being bearish. Then I can what? Trade along and I can have my trend line as simple as this. This trend line, I maintain it, right? Until this particular low is taken. So I'll be expecting a market to create this what? This impulsive corrective, impulsive corrective, impulsive leg until this low is taken. That is how I'll follow it until the price action hits the overall TP. I hope you get my point. We'll go straight into the chart now and we're going to backtest this strategy and see the raw application of it while on chart, right? All right. So not to prolong this particular video, we're going to do a 1, 2, or 3 backtest on this, looking for a way to simplify the whole of this story and this message you have preached on a chart and how we come about it and make it as simple as having 3 trend lines on the chart and you trade profitably. So I think I'll go to a brand new pair that I've not opened for a very, very long time, and we'll see how we'll apply this particular strategy. I think I've opened 50. Nope. I've opened this one. Okay. Let's go to VIX 10 index, volatility 10 index, a brand new chart, and let's see how we can apply this particular one strategy straight away. So we always start analysis from the 24-hourly time frame, and I believe we should go back. Okay, fine angle. This is purely trending what? Down. Let's establish the fact that a push on the higher time frame is a trend on the lower time frame. Both impulsive and corrective leg, we've said that it is a trend on what? The lower time frame. Without any doubt, we know that this pair is actually trending down. Let me change this color to blue, right? So this pair is practically trending down, but that's not what we are saying for now. We want to identify the high. We cannot go all through the whole chart, but we'll just pick a section for the sake of time. We have a valid break of structure here. This is what I can see, right? And we have a valid higher low exactly at this particular point. Come on. A valid higher low exactly at this particular point here. So also we have a break of structure, right? And we have a valid higher low here. Okay. So you can see that this market is purely trending what down. We have a push that is impulsive, We have the corrective, we have what the impulsive, and we have the corrective, we have the impulsive, we have the corrective, we have the impulsive. You see how easy and peasy it is. So we'll go over it very quick. Now, we've said that both impulsive, right, and this corrective pullback are what? Trend on the what? The lower time frame. And I believe we should quickly go through that, establishing that fact. How do we do that? This is 24-hourly time frame. We're going to navigate down to the lower time frame, and you will see, for the newbies among us, you will see that this 1, 2, 3, 4, 5 candles here on a daily time frame is a massive trend on the lower time frame. And this 1, 2, 3 candle, bullish candle you are seeing here is also a massive trend on the lower time frame. Take, for example, we can head up to the 4-hourly time frame, and I'm sure we'll see a trend there. You can see it trend what? This is trend to the downside, right? And this is trend to the upside, right? So let's get down to probably the 15-minute time frame. You're going to see how it is. And we have trend to the downside and see trend to the upside. And we say, how are we going to know that the 4-hourly or the daily time frame is about to reverse? We say we must see a change of character. Before we get too deep into it, let me show you how to identify a change of character. We might be anticipating for a pullback, which I don't actually trade pullback phase, actually. Personally, I hardly trade pullback phase. So before you identify a pullback phase, you have to identify the high and the low, right? You can see this market break structure here, reading into 15-minute time frame. We have another break of structure here, and we have another break of structure here, right? And we have another break of structure here. This is the last break of structure that we are seeing here. If any price goes to sweep above this particular high, that means the daily time frame is about to pull back. That means the 4-hourly time frame is about to pull back. That's what it means. And we basically look for what the last imbalance. You can see the last imbalance is pretty sitting down here. This is a massive trade. You can actually trade. This is a counter form of what? Trading. So before this pullback phase on the higher time frame, there will be a change of character. And before the next what? And before the next continuation, before the impulsive phase, just like what you are seeing here, there must be a change of character. You can see the value change of character we are having here is exactly at this particular point. So, having established that, we will want to go to the higher time frame and see how we can reduce the whole of this story into having just 3 trend lines on the chart, and we trade with it profitably. So we'll go back to the 24-hourly time frame and work our way down from there to the downside, right? Now we have a high, we have a low, and we're possibly expecting a pullback. First of all, we need our trend line on the chart. Where is the trend line heading to? It's easy peasy. I can simply draw it from here or anywhere and just map it just like so, or simply have it from here. That if you don't want to drag it all the way from this top here. So if I have these, what's the daily time frame telling me? The 4-hourly time frame is basically what? Going down and all that. Let me just extend it to the top. I just want to use these points here as an example for this particular video. You can go do your own detailed backtesting and you have your own result. But before then, let me get rid of this particular, come on. Let me get rid of these and let me get rid of this, right? Okay, no, let me leave this pullback phase because that's where we want to what? Navigate into. Now, if we have this, before then, this particular price action has not developed. So we assume this one is not part of the whole process. So our trend line is going to come all the way from what? This upside here, telling us that the market is what? Trending down, and it's going to be like what? So this is how the trend line is going to be. That if you want to behave that this particular trend, this particular price action, it has not been developed as at that time. Then we'll go down to the lower time frame. We want to see, we identify our high and identify our low. Where is the high and where is the low? Exactly at this particular point, this is where the low resides. Permit me to get rid of this. I'm sure we'll know how to work our way within this particular level here. Having known this, we don't know whether this price action will stop here, whether it will stop here or here, but we don't want to see break above this because the moment we see the price action break and the candle close, what it tells us is the trend has actually what? Changed. So no matter where this price action will either to this particular point, to this particular, we don't know. That's why we need the lower time frame for the confirmation of what? The next impulsive leg that will go to sweep this particular low here. Let me get rid of this drawing. They are too much on the chart. Permit me to do so. Come on, let me do, okay? So, having done this on the daily time frame, we then work our way to either the 8-hourly or the 4-hourly time frame, depending on the one that best suits what you want to do. So I always place 4 and 8-hourly time frame. I can simply go to the 4-hourly time frame to see what's going on. I've not actually, let me check, okay? Now, we are possibly looking for the pullback phase of this particular trade so that I can take trade to the downside. And coming down to the 4 hourly time frame, I'm kind of seeing this pullback here. This is a red sign for me. On the 24 hourly time frame, my trend line is pointing down. But while on the 4 hourly time frame, my trend line is pointing up, I will be very careful in taking trade here. Although there are tricks we normally take and others on how to actually get involved in this, but that notwithstanding here. But the moment I see this, I'll begin to match break. There's a problem. There's a problem. That's a red sign for me here. But if I see this realignment here, just like where you see this particular break of trend line, and the market is trying to what? Start shooting down. Where is the place whereby the 4 hourly time frame will realign in the daily time frame? It will be definitely this particular zone here. So I want to see this particular level break. I just want to have it so that my 4 hourly time frame will have this perfect trend line you are seeing here. If I have this particular trend line, this particular level got validated, and my trend line is perfectly established, I'll get rid of this. Now, with this particular zone, with this particular point alone, I am done. The only thing I need on the lower time frame is simply, simply waiting for a simple pullback on the 15-minute time frame, and I'll start shorting the market to the downside. And I simply go to the 15-minute and observe what is going on. All right. Okay, thank God we have this there, right? The market realigned exactly at this particular point here on the 4 hourly time frame. This trend is already pointing down. Any pullback, any pretty corrective pullback on this 15-minute time frame is a good entry for me. What can you see here? This is pretty corrective for me. This is what I want to see, right? And if I have this, then I'll begin to look for where possible place I want to enter. And what will get me into the trade is simply the change of character on the 15-minute time frame along with the break of my trend line. Now, where is the value change of character? I'm sure if you have watched the previous video before coming to this, you should know where your value change of character should be by now. And that is sitting down exactly at this particular point here. If I have this, I'll now look for what? The next imbalance. Look at this simple, sweet, small imbalance standing here. That should be your entry. Right? This should be my entry. But look at this humongous stop loss here. I might be skeptical with taking trade. And if I must take trade in this particular zone, it must be with a very small entry, right? And while this price action failed to tap this, you can see that when the market was coming back to this particular zone, you begin to observe again. This market is still creating a kind of uptrend because this is more or less like a higher high, right? Higher low and higher high. So we want this low again, that if this price action failed to tap, you will still pay attention to this structure, mini structure that's been created here. Where is the another change of character you are seeing here? Look at it here. This price failed to tap, but I have another entry position here. Now the market break out this particular, give me a pretty change of character here. Where is my imbalance? Look at it standing here. I can still launch an order here with my stop loss above this particular zone, and I'll target the next low on the daily time frame and not on this 15-minute time frame. And that will sink to the downside. Probably you might target this particular point here, and you hold your trade pending where the market hits TP. Now, once this one hits, you still look for simple. Any pretty opposing trend line is your entry. That's it. Don't overcomplicate things. Look at it. Pretty opposing trend line. Action line. Where is the value change of character? Either here, you take this particular place as a value change of character, or here, because this is no longer a single candle pullback. Then your imbalance is here. You can still launch an order here. This market pullback, fail to tap in, and still went, leaving you behind. Right? This is how you still go and look for this is how you simply find entries. As long as 4 hourly time frame and the daily time frame are in alignment, any pretty corrective movement on the on the 15-minute time frame, just wait for a break of your trend line and a value change of your character, launch your order, trusting the process. I've been trading this for a while and it's proving to be highly profitable, and I'm showing you practically how I normally do it. If this failed to tag me in, right, I still have another imbalance here, which is pretty much standing here, but this is to me the best to enter. Right, this particular zone here, you still look for you can see the market gravitate, still pull back to this particular zone here, and you can see if you are launch an order here, you still be good to go with a stop loss above here, and you still target the all-time low. While the price was still coming back, there was still another trend line, which is this particular point here. Why are we doing this? Because the 4 hourly and the daily time frame are in alignment. We wait for a break or a value change of character, which happened exactly at this particular level here. Then we look for the last imbalance, and short the market. Simple. Where is the last imbalance? We have one here, which is cover the whole of this particular candle, you can short the market from here, exactly at this point, with your stop loss here, if you are okay with it, and you still target the all-time low here, right? And you can see how the market does keep shooting down. So this is the whole process. You will continue looking for this pretty corrective by on the 15-minute time frame, waiting for change of character, and you keep shorting the market pending when this trend line gets violated. Now, the rule is when this trend line gets violated, trust me, we are heading toward this particular trend line. If this market breaks this trend line, we are heading to this particular trend line. You will have that at the back of your mind. Probably let me shift it forward. Now the trend line got broken. The moment I begin to see this kind of thing, right, I know that we must tap somewhere within this particular trend line. And I'm sure you see the market pull back to this particular point, not tapping this, and it just simply shoot down. So this little is enough. If you actually go back test, go and gather data, understand what the structure is saying. This is how we make those complex strategy and bring them into trend line, and we trade them profitably. If you don't understand this video, take this particular video, go rewatch it time and again. This is your golden key here. Unlock your profitability. Thank you for staying to the end. If you're not yet subscribed, kindly hit that subscribe button, turn on the notification in order not to miss content that will be coming from this channel. And until next time, peace out.